Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. And please subscribe to my articles and Twitter feed, as that'll help you out reviewing what we cover on the show. So for the agenda today, currencies, big changes in currencies this week, and I think it's critical that we stay on top of those because they can change in that can really affect the overall markets. As the market fails here, let it base. I think we might have another week of this. Fed meeting and quad witching, and then watch the technology stocks. So those are important things to me on my radar setting up for next week. And now we're going to jump into it, and I'll show you why those things are kind of critical. So first of all, I love this little market box. I look at it all the time. But what I usually try to do is go in and just see what's working. So here the Russell is finally the best performer, and lately it has been one of the weaker performers. So that's probably good news that it's starting to pause. But if we just click on the Nasdaq, or actually let's use the Nasdaq 100, because there's a couple of things going on here that make this a little crazy. So here's the Nasdaq 100, and you can see kind of lost the last 2 weeks of support. And looking at the map, of course, we have the 200-day running rate through the middle of this chart. And so as technicians, this is kind of a bearish omen for us. Doesn't mean the world is ending, but it definitely means it's taken a pause. And this is the chart that is much more concerning for me. And this is probably the reason that I have been struggling to get too bullish here. I mean, I was really bullish here. I'm not so bullish now that we've moved up back to the zero line on the momentum curve. So briefly, we're watching this black line, which is the 40-week moving average on this particular chart. It rolled over, breaking down. Now we have the 10-week hooking up, and so we want to watch and see if we find any support in this range here. But I would not want to see us start to fall below the middle of the weekly Bollinger Bands, which would be at 67, 69. And this is on the big tech leaders. And there's a couple of reasons for that, not just the fact that it's the Bollinger Bands, but it's more that if the tech leadership all of a sudden can't hold the 20-week moving average, then we're probably going to start accelerating lower. So that would be a concern for me. So I've shown this chart in various phases many times before, but what this chart is it's a 1 hour chart. It just refreshes every 5 seconds. That's a StockCharts Pro setting. And then I just leave this on, and usually I only have it for 10 days showing up. But in this particular case, I want to show the big picture. So here's roughly the 20-day moving average on the VIX. And you can see we're kind of breaking out to the upside. Here's the S&P 500, and you can see that we have been supported by this all the way through until earlier this week, and now we're breaking down through that level. One of the reasons I don't think we're ready to get going again yet is our PPO line, whether we use a big one way up here or we use a little kind of faster one that's sloped down here. Until this is over here, say sometime next week, I would expect at least some bounce and try to get back through that. So as the momentum wanes here, that's probably more important. And you could just see that the CompQ broke down in a couple of days ago. The Russell broke down on Tuesday roughly. And the TSX is just breaking down today. So this outperformance by the TSX was somewhat interesting just to see, because normally I like to see the Canadian market, or I use the Canadian market as a guide for other markets. And having this hold up so well is either very bullish or very odd, one of the two. So sitting, watching quite closely. And the Canadian banks reported last week. Their numbers weren't bad, but they're kind of one of the big heavyweights in the Canadian market. And then oil and gas is another one. And there's mixed things going on in the oil and gas. But the bottom line is with crude dropping below the 20-day moving average down here, this is USO ETF. With it dropping down here, that was a concern. And that'll probably start making the oil stocks drop a little bit. Here's gold, and this one's a really interesting chart because these gold GLD literally traded sideways for 4 days with almost zero price action, got down to, new 2-month lows or 1-month lows and just held like a rock. And now it looks like it's trying to go back up again. So the 20-day moving average for GLD is right up here at 124. Obviously, I'm on a 60-minute chart, so it's called the 100-period moving average here. But the point I want to make on this is that we'd like to see gold get back above that before I want to get too bullish on this. Here's UUP at the bottom here, and this is the US dollar. What you see is this breakout in the US dollar, and this is very big. We have been sitting here watching this level for months, and it finally broke out yesterday. And so today we're having a little bit of a pullback, but the bottom line is where it closed on Friday is going to matter a lot, because when you go home on a weekend with that position in place, that's a critical point on the chart. So this was in my blog from last weekend, and I covered it off on the weekly market review, which I produce once a week on Saturdays. And it comes out, there's a copy that goes on StockCharts, a copy that goes on YouTube, and a copy that goes into my articles under the Canadian Technician. So if you're hunting for that, that's where you can find it. But last week we had the S&P at 2,800, the Nasdaq at 7,600, and the Russell at 1,600. You can see that those were big, important reversal levels for all three of these before. And so here we sit, and sure enough, bang, down we go. So the S&P is now below its 40-week moving average, which is pretty important. The Nasdaq composite is coming down here. I didn't post their moving average levels, but the first level of support for the Russell, I think, is 1450. And we'll watch and see if we get any kind of traction at that level. Okay, so this is the big picture where we currently are. And looking back all the way through 2018, you can see we got here roughly January 1st last year. So we're unchanged for a year and, well, 14 months now. But more importantly, we want to look and see in here, is there another place that we would have support? And I think this 2675 level looks pretty critical. It held in here twice. So we'd probably like to see that hold a little bit more. So that gives us some target down just a little bit lower than here to kind of work with. We did see the PPO rolling over. That was more of a concern for us. So that was one of the things I wanted to watch. But looking at the, on Wednesday, I focused on the railways, and the point I was trying to make on the railways was they looked concerning. And so if we just update this for the current minutes, so Norfolk Southern is down almost 2%, CSX is down, Canadian Pacific is down. So these railways are clearly outperforming to the downside, and that's not a comfort thing for me. I think the best one on this whole list, if I didn't refresh it, I wouldn't have this problem. Anyway, here's Canadian National, and it's down 1%. So it's the problem is if the railroads start to underperform the indexes, that would be a bigger issue for us. And for more information on that, you can check out Wednesday's Market Buzz. And if you just go to YouTube and Google Market Buzz, yeah, it takes you right to the page. So that's kind of a nice quick filter. Anyway, here's the transport picture, and you can see the concern. And I have many friends on Twitter that are avid 200-day moving average followers, and I have a few that are not, but I consider it to be one of the bigger moving averages. And you can just see on this railway, when it's above the 200-day or the 40-week, it's important. When it's below it, that's even more important. And all of a sudden it rides up here for a year and a half and then starts to fall below, rallies back up to it, fails, rallies back up to it, and so far it's failing. I think it's critical to be aware of the position of that, and more importantly, to be aware of the position of the momentum. So we currently have this downtrend in place, and I think that's one of the single biggest clues that we have that this market still has work to do. to get out of this trouble. So maybe we pull back and then rally, and that would be fine. I'd be okay with that. What I really want to watch for is if the momentum rolls over well negative, crosses the signal line, it's really an important place to be cautious. And you can see when that happened back in here, you know, this was 83.58 and it went to 64.02. That's like a 25% drop in 2 months on the transports. Ding, that hits your portfolio pretty hard. So the reason I want to be cautious is not just because this is touching the 40 week or whatever. That's clearly a good clue for us. But the second clue is momentum under zero rolling over can lead to dramatically quick acceleration downward. And so as much as I'm not trying to be a doomsayer, I am saying that the chart is showing us reasons to be cautious and not I'll call it fully bullish and buy the dip and all that kind of stuff. Just try to contain your enthusiasm until we get a real directional move one way or the other. Okay, without going into all of these again, you can check those out on, we went through, all of the stocks on Wednesday. And so there's some really good information there. What I'd like to get into now is the currencies, and there's a particular issue going on with the currencies. And I try to cover these off every week in the weekly market review. But we had this kind of head and shoulders top construction forming, and what I mentioned last week was I was starting to be concerned because this looks like it wants to start turning up, not down. Well, so it was making a higher low on the momentum, then pulled back again, and now this week it looks like if it closes here, it's going to cross the signal line. And today we pulled back slightly. But the point would be if this starts to break to the upside here, and you can see we're breaking out to new 15-month highs, that's a critical zone on the US dollar. And last time when the US dollar started to rocket to the upside, when it changes this quickly, it creates some friction for everybody because we don't really, here the reason it changed was all of a sudden we had the election and things took off to the upside. But the difference in the currencies, a lot of times it'll mark a directional change in the market. So that's why I think following the currencies so closely is important. And I think I've been showing this chart for a couple of months now, but this Special K by Martin Pring is just reaching. I've got the little nub there, and now a nub here. So we're right. We couldn't get any closer in terms of trying to figure out which direction this wants to break out. And what it shows is the daily Special K, or the daily US dollar with a Special K indicator that Martin Pring created. But this 97.5 level is absolutely so important in history and all through time here, going back to 1980. And this week, we have the potential to be closing above it. Now, this won't close until end of day, or won't update until end of day. You can see the EOD here. What that means is the currency chart isn't updated live, and we would use US dollar, UUP, the ETF, to kind of track its movement through the day. But to get the final level on here, it'll show up on end of day. Now, let's just quickly walk through the rest of these currency charts. So this is the US dollar daily, just as a line chart. And you can see this 96.38, 97.38, 97.36, and now we're starting to push to the upside. Look at my PPO momentum line breaking out here. I showed the Pring line breaking out on the other chart. I'm sure I've got a few more US dollar charts here. Here's UUP, and you could just see this trend line snapping. One of the big concerns I have is when the US dollar started to push up back here in September. It was breaking this downsloping trend line. It wasn't breaking a horizontal line, but it broke this downsloping trend line and became one of the support pillars for the US dollar. And literally that run into November marked a big pullback. And then the market really didn't relax until we got to the highs here. And then once it looked like it was starting to roll over, then we started to bounce. And so now, again, it's easy to explain in the past. It's not so easy in real time. The one thing I will say is this horizontal breakout to me is a really big deal. And I want to be overly aware of what's going on with the US dollar. And here's the PPO breaking to the upside, and down here is the KST. Both of them are indicating the same thing. That's one of the points I want to make. Martin's KST is a little smoother. My PPO is a little whippier. But what I like about it is on a weekly basis, this chart is very helpful. And so I've got the PPO down here, and I just want to really see if it's going to start to push to the upside. So we have had 4 or 5 years of the US dollar consolidating in this range. This is UUP. We could go and just put in US dollar here. And we've got this whole range, and it goes up to 103. So we've got a little bit of room, but really the fact that this is traded within a 10-cent range or a 15-cent range for, I mean, most of it was in a 10-cent range, but a narrow range for 4 or 5 years. If all of a sudden we're going to go on a big, massive run, that would be important. You might notice back in 2014, remember when oil really went dumped? This was a big move, and it started in July. Oil broke support in September, and off this chart went to the moon. And you know, a breakout on the US dollar is a big deal. So we're above zero on the PPO, and if it was going to start turning higher here, I really, really, really want to be aware of that change in trend. So getting into the euro, actually, before I show you the euro, I want to show you the Swedish Krona. And there's a reason. And a couple weeks ago, the Swedish Krona started to break out to the downside, and I said, you know, this is usually an early indicator for me that the euro might get weak. And here's the uptrend in momentum that was breaking, and it rolled over pretty hard. And the Swedish Krona is really small, really sensitive, but it trades similar to the euro. So if we get into the euro weekly, what we see here is we're now breaking through this zone of support that we had seen, but it's just breaking this week, and the Swedish Krona broke obviously 4 or 5 weeks ago. So it can help us. It doesn't always help us, but at least it gives us a reason to have a bias one way or the other and trade with that bias, and then know where we're wrong. So here's the Krona zoomed in on a daily, or the euro zoomed in on a daily basis, and you can see breaking support. Now, over the next week, we need to see if this will hold or if it's a false breakout and this goes bang all the way back through. And as Martin likes to say, a failed breakout is probably a better clue than a holding breakout. And the reason is because you get above average moves in the opposite direction. So really an important time to pay attention to the currencies. And then to top it all off is next week we have a Fed meeting Tuesday, Wednesday. We have quadruple witching on Friday. So next week has a heightened sense of volatility anyway due to those two components. And to add on that, we have these currency breakouts going on. So this is the fourth quarter kind of thing, and we're watching to see if these big major currency changes are going to hold. Really an important thing to be aware of. So let's get into the British pound. Same thing. This has been trying to rally a little bit. It's got stuffed at this 132.50 level. PPO right at zero, and we've got the 65-week moving average rolling through here, which for some reason on currencies, 65-week is important in Japan, and it's also important on Martin Pring's work. But what you see here is this is starting to roll back over, and if this is going to fail right here and start to break down, and all of a sudden, again, US dollar breaking out against all these other currencies would be a very big deal. So let's get into the Japanese yen, and what we see on the yen, of course, we had this huge spike up, which looked so good, and then it's been falling ever since. Now, the point I want to make is this is the first week right here for the PPO signal to break down just barely above zero. And if I unwind this chart a little bit, I think that's probably enough. You can see back here when this chart failed just around zero. This was a pretty important clue that something else was changing, and when it rolled back over, look at the change in the move. So again, right here at this point, and all of a sudden down she went just as it fell below the 65-week moving average. So I'm paying attention to it. One of the concerns I have is if gold and the yen move similar, and you can see the line on gold here. When they move similarly, if the yen is going to keep falling, I'm going to have trouble getting on board a gold move, even though that's what we saw today on the GLD. So while the GLD is trying to bounce here, I'm watching the yen for confirmation, and if the yen is going to continue to fall, then I'm a little more concerned. So you can see on this weekly chart that the yen is actually trading up off last week's low, but it still made a lower low and a lower high so far this week in a downtrend, which doesn't suggest to me to get long the yen yet, that's for sure. Okay, looking at the Canadian dollar, again, commodity-related currency, this chart is gapping lower, and we've rolled over here on the PPO again. This downsloping trend line, well, it started to get broken here. We didn't get through any sort of resistance level, and we're failing. The downtrend is intact for 18 months now. I see no reason to get long here. And a horizontal support on the Canadian dollar, if that starts to break as well, you'll notice the Canadian dollar was pretty weak all through 2014, 15, and 16. And then in the lows in 2016 rallied out of here. Notice this touch on the 65-week moving average just as the US dollar broke out on that previous chart I showed you, and down she went. And here we are sitting here touching the 65-week moving average and failing. Really important stuff that, you know, as we go below zero here and can't get any momentum, this is not a place to get very optimistic on these currency moves against the US dollar until we see some sort of a directional change. Here is the Aussie dollar, and again, this is a commodity country currency, and you can see the PPO is actually almost ready to cross the signal line. We'll see if it ends up crossing it by the end of today. But look at how important this base is. This is another 4-year trend line trying to hold. There's a little bit lower in 2016. But if this is all going to shipwreck here, you know, my optimism on commodities is dramatically reduced. That is all critical stuff. Now, let's talk about the yield, bond yields. And the reason I want to do this the reason I want to do this now is we have this chart sitting here, and it was just last week Rick Santelli on CNBC mentioned that the 2-year, which is down here in red, the 2-year yield versus the 30-year yield, was the spread was widening for the first time in a while, and that was a pretty important signal. And while I definitely agree it was a pretty important signal, the problem is it didn't hold. And so we had the 30-year breaking out to 2-month highs, almost 3-month highs. That's usually a good thing to look for, but literally came up and reversed right away. In here is the 10-year in brown, and we see that this is barely holding on to support going back. So we've got today to watch for the close, and again, this will update after market close today. But this is a critical piece of information, and if we go look at the TLT on this chart over here, TLT has been rallying, just holding in here today, and you know, pretty much middle of the last 2-week range. So pretty important, or sorry, 2-month range, and sorry. What we want to see is just what direction that's going to go. Now, again, one of the charts I like to use is the BlackRock Municipal Quality Fund. And the reason I like to use it is it tends to lead the 10-year for the most part. Doesn't always. These are guidelines, not posts. And what we see is this has been pushing higher even though the 10-year was actually trying to improve. So that brings me back to, I'm just going to go jump into this chart list. Got a few more things I want to show. Should be a great weekly update tomorrow because I'll update all these breadth indicators that are rolling over. I would encourage you to come and grab a coffee and watch that tomorrow. I'll have it up posted usually by later in the day. Okay, so here's the 10-year yield, and I mentioned that this is breaking down, and it consolidated sideways, and now what we're watching for is which way this wants to break out. The full stochastic is right at 50, and why is that important? Well, again, going back multiple years, when the full stochastic fails to get back through that 50 level, you can see what happens to the chart. It just keeps falling. And so here we sit right at a very important level. We've broken to new one-year lows. Now we've consolidated, but really no upside pressure. The 40-week moving average is above our heads, and we're trying to get back through it. PPO is below zero, so if this wasn't going to accelerate higher and starts to roll lower quickly, we've seen this movie before, and it doesn't look great on screen. So be very careful here. I think the markets are tenuously situated. I know lots of people are very bullish because of how much breadth we have. I think the problems are overseas, and they're coming to us in a market near us. So that's why I'm so focused on that. A week ago or so, I hammered away on the marijuana stocks again. And it's more to update you on if I'm going to be wrong or if I'm going to be right. I think the important thing is to have a line in the sand and say, why would you leave? And back here, when these relative strength trend lines start to break, it can be very important and very helpful. Now, not all the stocks are breaking it, but if you go through the vast majority of the marijuana group, they're starting to roll over. And so this uptrend line has just been broken. We're pulling back, and today's holding in there just fine. It's not critical by any stretch. But the point I want to make is this uptrend on the average. So this marijuana ETF is kind of an average of the marijuana stocks, and it's starting to break down. It's not critical yet. We have an uptrend line here that's still trying to hold. Maybe if I picked a little more shallower line, that could work. But the big thing for me is just it is trying to tell us that it's weakening, and you can see the scooter ranking weakening up here. I just want to make sure a whole bunch of people don't get caught with overly zealous optimism, and all of a sudden these charts start to break down hard. Here's Canopy Growth, one of the big ones, and its relative strength has been declining for almost 2 months. So that's one of the things I'm concerned about. Look at its PPO rolling down towards zero, coming back up, and just trying to hold here. Now, if I'm wrong, this will break out to the upside. All good. If I'm right, and this does start to, in fact, fail, this is probably one of the best times to leave the trade coming up here. So that's the point I'd like to make, is just that we're at one of those inflection points. Technicals give you that opportunity, and this is a chart just to update you from last week, and rolling over quite hard this week, and PPO right at zero. Kronos is another one that has been behaving very well, and looks like it wants to start. The uptrend line here got broken a while ago. We haven't made much progress. We had one day in there that was up, and all the rest have been down to sideways. But there's a longer trend line here. If I want to go with that, call it 3 or 4 months, and give it a little bit more room to fail to the downside. I might be wrong. This might turn and go to the high side, but I really wouldn't let this relative strength get much weaker. If it starts to go below this blue dotted line, I'd be making sure I locked in profits. And PYX, this chart, same sort of thing. Relative strength is breaking. I just think it's better to do this live as it's doing it, rather than in hindsight. And look at this momentum trend on the PPO, and we're just starting to come to the breaking line, and you can see back here, October 22nd, it was breaking. That was not a bad place to get out before it continued to drop for almost 2 months. So thank you for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern and 7:30 Pacific time on StockCharts TV. Thank you.